So we're here on the podcast, Your Home Helper. I'm your host, Inspector Q, and I have a wonderful guest today that I want to introduce to you from U.S. Bank. U.S. Bank. His name is a mortgage loan officer named Adrian Davis. Fantastic guy. I know you're going to get a lot of great information. Of course, this podcast is all about learning how to take care of your home through home maintenance, how to take care of your home through home renovations, as well as any type of real estate transaction when it comes down to selling and buying your house. So we're here to give you great information and make sure that you're informed so you can do the right thing and feel safe and informed in regards to how to go about your home. So without further doubt, I would like to introduce mortgage loan officer Adrian Davis. Adrian, you're the first guest on Your Home Helper. I
Um,
couldn't find anybody wonderful to choose to have as a first guest, and I thought you would be the best guest to bring on first, and at the perfect time with all the storms and everything going on, and people trying to find ways to better increase the value of their house at the same time with the housing market and whatnot. You have a top heavy where you have sellers, but a lot more people are trying to stay in the house and actually do some renovations to the house. So I wanted to bring you on to really talk about a little bit about what you do, and then we're going to go into some questions. So just kind of talk a little bit about what you do in your role as a mortgage loan officer.
Here at U.S. Bank, Adrian Davis, once again, thank you very much, Quintavious, for having me on for this special podcast. In the industry over the years, over the 3 decades I've been in it, I've seen a lot of changes and the ups and downs. And with the recent Hurricane Ian that hit the local Florida area, I'm seeing a lot more individuals having a need there. Especially when it comes to their homes or their properties. And as a national lender, we're able to assist individuals in many different categories where it comes around the financing to care for those renovations or any types of repairs they may need to the home. So ultimately, I've been in this industry helping many individuals enjoy home ownership. Not only at the time that they take out the mortgage, but throughout the life of the mortgage itself to benefit not just them, but also their family as well. I consider everyone to be a family member.
Oh, that's awesome. And you hit it right on the head. During this industry, during this time, there's a lot going on with the hurricane in, and we're going to touch on that. But before we get deep into it, I had a few questions lined up for you today to make sure that the viewers, the listeners, get all the things that they've been waiting for, that they came craving for from a mortgage loan officer like yourself. So we're going to jump right into it. So, of course, one of the questions I get as a home inspector, typically when we do the home maintenance inspection, now that we find all these, defects, maybe a roof damage, electrical needs to be rewired inside the house because it's a very old house and they have some old cloth wiring, or they may have some old plumbing pipes, polybutylene pipes. And they thought about maybe, renovating the kitchen floors and all that, but they were smart enough to call a home inspector first to make sure that, hey, before we do all these these home renovations, let's make sure that the main components are in good shape. So they asked me these questions. Of course, I'm not a mortgage loan officer, or I can provide any financing information. So the first question I get asked is this here: what are some funding options for homeowners to renovate their home?
Well, there are some common ones out there. Some actually take the path of going to financial institutions such as banks, credit unions, or even their investment firms. And they seek to get those credit cards, personal loans, or lines of credits. But what many have to understand about those types of avenues, though good, especially when you can qualify for them, they do tend to have a higher interest rate, and they're limited in their tax advantages that they're able to provide to the consumer. Whereas others actually seek the home ownership route, owning a home itself through mortgages or potential home equity lines of credits. They use that equity out and they're able to get much lower interest rates than what they're able to get in those personal lines or credit cards. And they may have certain tax advantages, but of course, always you want to look towards your CPA or accountant for tax advantage advice.
Well, that's great. That's more than what I could have told him. I would have just told him, hey, uh, do what you can, take some money out your bank, and then would have been the wrong information. They probably would have used their life savings messing around with me. So that's why I just direct them to some good help that can provide great valuable information that they can make the right decisions in a timely fashion. So next question is, what type of loans do they have for renovations of the home?
Well, you really want to look at the rehab lending portion, which is a renovation type loans, and that's primarily for purchases. Fannie Mae and Freddie Mac, they have a renovation type loan. One's called the Home Style for Fannie Mae, and the other is called the Choice Renovation for Freddie Mac. And those are more for your conventional types of renovations when you're purchasing a home. Then, of course, many are familiar with the FHA one, which is called the 203K rehab. That's one choice that they have in the government lending side as far as renovation. And then, of course, most institutions, financial, have their own portfolios, but mostly seen with bigger banks where they might have a construction to perm loan. And if over 50% of the house needs to be rehabilitated, or renovated, then of course those come to be a valuable tool for many individuals who own a home. Then the alternative that some have sought is the refinance alternatives. And these options are normally under a cash out refinance where you can pull equity out of an existing home itself, and you have one mortgage that you're able to have as a monthly payment. Now, many individuals, when the market tends to have higher interest rates or is very volatile, they tend to shy away from the cash out refinance. But you really have to weigh the cost in, and that's where whoever you're sitting with, as far as a lending consultant, you want to make for sure they look at alternative solutions and weigh those out. Communicate with you, correspond with you in what's going to benefit you and your family. One that's very popular right now during this volatile market is the home equity line of credit. And this is where you don't have to touch the first mortgage, especially if you have that lower interest rate on it. But you can actually pull additional equity out of the home itself. And the home equity line of credit gives you the benefit to tackle those renovations, home improvements that you've probably looked at over the years, or even if you've experienced some sort of damage from the recent hurricane events here in the local Florida area, you can turn around and use that equity to cure some of those particular challenges or concerns that you have with the home itself.
That's awesome. That's great information. So I think you touched on three different types of loan, if I'm not mistaken. You talked about a construction loan, if it's more than 50% that you're doing to the house or rehabilitation. You talked about the cash out refinance loan, as well as the HELOC, the home equity line of credit, which of course like you say, you got to weigh your options at this particular time and see what works best. So that's very good, because most people don't know if they have any one of the options, and sometimes I think the investors that I know that do inspections through with us, sometimes they go the construction loan route, and I think they call it a bridge loan, but we're focused more on homeowners right now. So, but those are the great three options. Next question. When should a homeowner consider applying for a home improvement loan? When should they actually consider that?
And that's a great question. And many individuals want to jump right to getting the money out or the equity out. But really, my strong recommendation there, and this is my opinion, of course, is you want to weigh the cost first, so that you can identify what needs to be done, and then you can budget for them. And this is where, Quintavious, you come into play as the home inspector. You really want to drive towards the home inspector because, one, they can evaluate the overall situation as far as what needs repairs and what may need replacement with the overall home itself. So once you've established that, then you can get an idea as far as what the financial cost is going to be behind the repairs or the renovations that you're seeking to do. And then with that, you want to determine what is my eligibility limits? How much equity out of my home can I actually get? And this is where you'll next come to the step of meeting with a lender, meeting with your consultant, your mortgage consultant, someone that you value their opinion and their thoughts and is really knowledgeable about how they can actually weigh the options out with you and your family. And I use that term a lot because often we try to stick with one category as the path that we want to go down, and then all of a sudden what happens, that may not be the best avenue for us. There may have been something else out there that was much better that we could have sought out. So always make for sure your consultant is on the same page as you, but consult with them to see what those options are and what best fits the need at hand when it comes to those home improvements.
And hope they heard very clearly. Get your home inspection first. Get a home maintenance inspection to to see what needs to be replaced or what just needs to be repaired. This will save you time to identify what contractors or what work you need to have done, and also a dollar amount. So you know, of course, I'm I'm a home inspector, so I'm always ears out to see where the home inspection lies into the process, and it kind of, the inspection is a big it's a big factor in every home purchase or even home renovation. And many people get the idea you just do a home inspection when it's time to buy a property. But if you're doing renovations to the house and you're getting this type of money out, whether it's 30,000, 40,000, you may want to make sure that you tackle the most important items. So that's great information, Adrian. Now, how do home improvement loans work? What's the ins and outs of them? You don't have to go very detailed, but kind of give us a little understanding of how they actually work and what we should expect.
Okay, we'll do the high level overview, that airplane mode, okay? At 30,000 feet, okay. So here's how do they work? Actually, ultimately, you have to have the tangible property, the home itself. And with the home, we're using a portion of the equity or return on investment out of that home in order to work for your benefit. It's your money. It's not owed to the bank. It's money that you actually have just lying there in the in that particular home or tangible property. It's sort of like having money in a savings account or in a bank, that capital investment. So you're able to pull that money out, whether it be through a cash out refinance or whether or not it be through an equity line of credit. You're able to tap into that and then use that as a resource to be able to cure the repairs. Now, when you think of a home equity line of credit, here's an advantage of the home equity line of credit that many may not know. When you think of it as a revolving credit card where you're tapping into the equity out of your property for the first 10 years of the actual life of that home equity loan. So what happens is you're able to go in and pull out money as needed. There's more flexibility with a home equity line of credit than there is with a cash out refinance. And in many instances, when the interest rates are higher in the market, you want to look at that as an alternative because you have the flexibility to control the balances on there and how much money is going to be used for each project that you take on. And then you can pay it off and have that money readily available to you again, just as you do on a credit card. So home equity line of credit, I'm not trying to pitch that as the overall solution. Do get it evaluated. But it is a good avenue, especially when interest rates are on the rise. The one thing that you do need to be aware of is market conditions can control the interest rate on the home equity line of credit. So because it is a variable interest rate. So just keep that in mind. But that's how home improvement loans actually work for your benefit.
That's incredible because I didn't know that the home equity line of credit was almost like a credit card. So that that explains why the variable rates go up and down, because the credit card variable rates go up and down. So you just, when you put one and one together, you get two. So I like that.
Good math there.
So our home loan improvement loans, are they deductible? Can you write them off on your taxes? I know you're not a CPA.
Yeah, good disclaimer.
But is that something that we can, make sure that Uncle Sam can and kind of gives a kickback for? That's what we want to know.
All right. Well, another great question there. Many individuals, that's the reason why they go that path versus taking out personal loans or credit cards themselves. With your home itself, as you said, disclaimer, not a CPA, not an accountant, but when you file your federal tax returns, your personal tax returns, there's a Schedule A in there, especially when it comes to your homesteaded property in the state of Florida. You have that as a means to deduct interest because you'll get a 1099 statement at the end of the year from the bank or financial institution that holds your loan or note. Then in addition to that, you have what's called a Schedule E. And that actually deals with more or less investment properties or real estate that's owned, and any types of repairs or renovations that you do to the overall property, you claim them on the Schedule E. But for more tax advice, definitely seek a CPA or an accountant's advice when they prepare your taxes, but keep your statements when you get them from the bank, the 1099 interest statements that you will receive on each mortgage that you hold under your name.
So remember, keep your statements from the mortgage company. Again, Adrian Davis is not a CPA, all right, not an accountant. Go see your accountant in regards to how you go about getting that tax deductible. Of course, he has a wealth of knowledge, so he knows a little bit about that side as well. But still, invite your accountant to look over those tax documents to see how you can get that taken care of when it comes tax season. Next and last question. I know that we took up, we got a lot of great information, but this is the last question here. Are home improvement loans secured? Are home improvement loans secured?
Well, the answer to that question is yes. Why
Awesome.
yes? Yes, it is. It's tied to the overall property. And because they are improvement loans, and the key word being home, that is the collateral that's being used to secure the overall release of equity to the individual or to the consumer that's taking out that loan.
Awesome. I know that gives a sign of relief to many homeowners, myself included. Hey, it's been wonderful talk. If anybody has any questions, feel free to reach out. Matter of fact, give them avenues of where they can reach out to you in regards to any type of loan products that may be suited for them in order for them to make home repairs on their house. How can they best contact you?
Well, you can always reach me by mobile phone at 321-287-0787. Once again, that's 321-287-0787. Or you can visit my website. You can either Google it, usbank.com /Adrian Davis, and you will be able to visit my actual website page. And if you want to do a mortgage calculation or you would like to seek additional information, you're more than welcome to do that. And then finally, my email address is Adrian, ADRIAN .Davis, DAVIS @usbank.com.
Awesome. Thank you so much, Adrian. And just to recap once again, guys, Adrian touched on a lot of great different information in regards to loans. We touched on funding options for homeowners. We touched on the types of loans that are available to homeowners for renovations. We also talked about how the home improvement loan works and if the home improvement loan is secured. So if you didn't get a chance to take notes, definitely take notes. And if you're serious about, getting a loan option to help renovate your house, please contact Adrian. Also continue to look forward to our next podcast, our next interview, where we will give out some more great information regarding home maintenance, home renovations, as well as the sale and purchase of a home. Thank you for your time, and hope to see you again.